Dear students, today's class will discuss about accounting for partnership firms fundamentals, points of focus to concentrate, understand, remember, and learn by heart. What you are supposed to grasp in this lesson? Legal framework, partnership law, and rules pertaining to specific items. How to record specific adjusting entries and transfer entries. List of specific items to keep your focus. List of important accounts you should know, important formulas and calculations, critical questions with numbers for your focus and practice, outlay of combined capital accounts, outlay of analytical table for rectification of errors. Partnership firm, the business entity formed by partners to run the business. So, partnership firm is nothing but the business entity formed by partners to run the business. So, the name of the business. All transactions should be recorded from the firm's point of view. Partners are considered as outsiders. So, therefore, the resources invested by the partners in the firm is called their capital. So, this is a brief explanation of business entity concept itself again. So that in this full book, volume 1 of partnership, you will be coming across you are required to prepare partners capital accounts again and again. So you should be thorough in what should be debited, what should be credited, all those aspects. So the debit and credit aspect plays a very big role in this lesson. Legal framework. So legal framework means which particular act or which company, which particular rules or which particular law is applicable. So Indian Partnership Act 1932 is applicable. There must be at least 2 persons to form a partnership and not exceeding 50. So that is what the minimum and max is. Minor can be a partner only for profits, and once again he should confirm within 6 months after attaining 18 years. So if a minor can be a partner. So minor is not competent to contract, but minor can be a partner only for profits and again not for losses. So again, if when he turns 18 years, within 6 months of his attaining majority, he has to confirm that yes, he is willing to be a partner. Otherwise, he will be liable for the acts of the firm right from the day one from which he became the partner. Persons of unsound mind and a person got disqualified by law cannot be a partner. So persons of unsound mind means, so these are all very specific to Indian Contract Act. Like, so there are some people who are not competent to contract. So a person of unsound mind is not competent to contract. Person disqualified by law is not competent to contract. Even these people cannot become partners. Provisions in case of partnership deed. Profits and losses are shared equally. So suppose if there is no partnership deed, then profits and losses are shared equally. If partner has given a loan, he shall be given 6% interest per annum. Partner shall not be entitled to any salary, commission, interest on capital. Similarly, firm cannot charge any interest on drawings made by partners. So this is a drawback when you don't have a partnership deed. You have to remember basically two things. Partners profits and losses are shared equally, and he will be given a loan of 6%. So how to identify? In the question itself they would have told if the question is silent as to what is the profit sharing ratio, it is considered that it should be shared equally. And if the question says there is a partner's loan and no interest rate is given, it is assume that you have to calculate interest at 6%. So all these things you have to keep in mind, and you have to proceed solving the problems accordingly. Liability of partners subject to agreement among partners. So one more concept again and again they ask. So if a partner carries on a business in competition with the firm without the consent of other partners and earns profit from it, the profit earned from such business shall be paid to the firm. However, losses incurred, if any, are borne by him alone. So these questions are again asked again and again. If a partner earns profit for himself from any transaction of the firm or from the use of firm's property or business connections, the profits earned shall be paid to the firm. In both the cases, the partner should give away the profit to the firm, but losses he will only bear. appropriation of profit. So the word appropriation is very important. Appropriation of profit means distribution of available net profit and interest on drawings among partners as salary, remuneration, interest on capital, transfer to reserves, and whatever name called. So basically it is the net profit. You have studied in class 11 that you calculate net profit in case of sole trader. So this profit is that itself. So what happens when the firm earns a profit, the profit is again divided to the partners. So it may be divided in various forms like as a salary, as interest on capital, some amount may be transferred to reserves. So whatever may be the name called, those appropriations, whichever are partners entitlements, they are known as appropriations. So whatever the profit you get, that you distribute to the partners is known as appropriation. Only if there is profit, there is appropriation of profit, not otherwise. If there is loss, that is loss, and you cannot give, because you cannot take out interest on capital from loss, interest on capital from loss, all these things. Charge against profit. Charge against profit means that it is an expense to the firm and is paid whether the firm earns profit or incurs loss. So charge, this word is again and again comes in this chapter. And charge, so when they say charge means it is an expense. It should be accounted. Remember that interest on loan by partner and rent payable to a partner are not appropriation of profit, even though it is paid to partners. So they are also considered as charge. So interest on loan by partner and rent payable to a partner are charges. So they are not appropriations. They are not appropriation of profit, even though it is paid to partners. So that's why even if the firm incurs loss, you have to pay interest on loan by partner and you have to pay rent payable to partner. Always you have to pay interest to the partner and rent to the partner. So it is a charge. It should be paid at any cost. Even if it is a loss, you should be paid. So remember this. So they will jumble up the questions. They will say they will simple give the profit, and they will give these adjustments in the question, and without looking into whether you have taken this into account or not, you should not proceed. Otherwise, the entire problem will go wrong. So you have to be very careful against this. So again, interest on loan by partner to the firm. So see what happens, instead of giving more funds to firm in the form of capital, the partner might give additional funds to the partner to the firm in the form of loan. So and the partnership firm may decide to give rate of interest whatever they want. So maybe they may fix it at 18%, 12%, 15%, whatever. So it is depend on the partners. So it is agreement between the partners. So if it is agreed, and then according to that, the firm has to pay interest on loan to the partner. So whether there is profit or loss, the partner has to pay, the firm has to pay the interest on loan to the partner. This is a liability to the firm carrying interest of at least 6%. So even if there is no clause about payment of interest in the agreement, if there is no partnership agreement, even then they have to pay 6% interest. So remember this. This is very important aspect. Treatment of loan and interest. Interest on loan is debited to profit and loss account and credited to loan account itself, thereby increasing the amount of loan. Alternately, it can be transferred to outstanding interest account also. Remember all this, because questions will be based on this also. So they will you will be asked to prepare journal entries. You have to pass a journal entries for interest on loan. So at that time you don't get confused. Don't write wrong entries and you will lose marks. Interest on loan by the firm to partner's advantage. So firm may advance some amount as loan to the partner. See what happens, the partner may request that he wants some money from the firm. So it is an asset to the firm, because the loan is given by partnership firm to the partner. So firm is not supposed to collect any interest from partners unless provided in partnership deed. Unless otherwise, they specify, the agreement specifies that what will be the interest. This is similar to drawings, but there he is taking some loan. So some sort of advance, some sort of loan. So when the partner takes loan from the firm, he is not obliged to pay any interest unless otherwise it is provided in the partnership deed. So not even 1%. So again be careful. So in the latest version of the new book, these are the new questions that are coming again. So this is the new concept which is introduced. So earlier questions were not much focused on this loan to partner. Treatment of advance and interest. Interest collected from partner is credited to profit and loss account and debited to partner's current account in case of fixed capital method, or capital account in case of fluctuating capital method. So what is fixed capital method, what is fluctuating capital method will be discussed in the next class. So this class is I will be discussing only certain portion of the lesson in this. Rent paid or payable to a partner. Charge against profit debited to profit and loss account. Even rent paid or payable to partner is also a charge against profit and credited to cash or bank if paid, or rent payable account if it is payable. Manager's commission. Manager is an employee of the firm. Therefore, the amount payable to him or her as commission in the nature of salary is treated like any other expense. Distribution of available profit or loss. Profit is appropriated up to the amount of profit for the year available for distribution. See, this point is very, very important. If after transfer of net loss and credit of interest on drawings to profit and loss appropriation account, the balance is loss, means there is no surplus, there is no money available. So appropriation towards interest on capital, salary and commission to partners is not made. So you cannot make any appropriation if there is no money, if there is no balance in profit and loss account. So if there is no balance, suppose profit and loss account is let us say 10,000, whereas interest on capital is coming up to 20,000, salary payable to partner is coming up to another 20,000, commission is coming up to another 20,000. So drawings, interest on drawings which is negative, which has to be collected, that is coming up to 10,000. So totally it is how much? 10,000 plus 20,000 plus 20,000 plus 20,000 minus 10,000. So excess. So the amount payable to partners is 50,000 because there is 10,000 profit, interest on drawings is 10,000, so it is 20,000, whereas the interest on capital, salary, commission is 60,000. 10,000 minus 60,000 is 40,000. So there is no money at all, so there is no balance, so you cannot make the payment. So it is not made, the appropriation, so it is not made, you are not supposed to make. So you are not supposed to convert the profit into loss. So it is appropriation of profit. Remember, this is very, very important. It is very, very important. So most often students forget and make mistakes in this type of questions. Loss is distributed among the partners in their profit sharing ratio. If there is loss, it will be distributed in the profit sharing ratio. If it results in profit, appropriation made up to the amount of profit. So if it results in profit, appropriation is made up to the amount of profit. So the entire profit may go off, but it cannot be converted into loss. Divisible or distributable profit. So what is divisible or distributable profit? Divisible or distributable profit is a profit that is available for distribution among partners after allowing remuneration, that is salary, commission, etc. to partners, interest on capital, transfer to reserve and charge interest on drawings. It is determined by preparing profit and loss appropriation account. In other words, it is residual profit remaining after all appropriations. So you can see in the next, so here you can see here which is rounded off. So this is known as divisible profit. So the item which is net profit brought down, which is 50,000, so that is net profit. So interest on drawings is an income, so it will come on this side. Interest on capital is appropriation, partner salary or commission is appropriation. So whatever amount is left, so 12,500, 12,500, that one. So the amount which is rounded off, so that itself is known as divisible profit. Remember, divisible profit is the ultimate amount, the net amount after taking out all the appropriations. Calculation of amount transferred to reserve account. So they will ask you to, there are another type of problem where they ask you to calculate amount transferred to reserve account, amount calculated as percentage of net profit. So in this case, what you have to do is you have to calculate the amount, I mean the commission on this 50,000, on this 50,000. So on this 50,000 you are supposed to calculate. So amount calculated as percentage of divisible profit. So amount calculated as percentage of divisible profit means, so this is divisible profit. So on this, when you calculate a percentage on the amount that is rounded off here, this is rounded off, you have to calculate a percentage of this. So for example, this is 11,500, or so it is 23,600, means it is 11,000, 12,500. So it is not clearly visible. So this is just for an example I am sharing with you. So it is not the actual thing. So just this amount, whatever it is. So 23,600. Obviously, it will be 11,000, 12,800. No, it's not 12,800. It's 11,800. So 11,800. 11,800. So 11,800, 11,800 is nothing but 23,600. So when you calculate percentage of 23,800, 23,600, so that is percentage of divisible profit. Amount calculated as percentage of net divisible profit. So net divisible profit means what you have to do. Net divisible profit means, so here again 23,600 into 10. Suppose if the rate of this one rate of amount of rate of transfer is 10%, it is into 10 upon 110. So into 10 upon 110. So you have to calculate it appropriately. So and then you have to transfer it to reserve. So remember this. So there is an example in the textbook, so you can see that and you can calculate. So be careful in calculating. So journal entries relating to profit and loss appropriation account. So journal entries relating to profit and loss appropriation account. See, this is a very important entry. So you know this partner salaries. Partner salaries are always debited to and credited to partner's capital account always. So that is correct because it is an expense. So that's why its partner salaries for remuneration commission are debited and partner's capital account is credited because it is a liability. But ultimately you have to transfer also, no? So partner salaries, remuneration commission also you have to transfer it to profit and loss appropriation account. See, you have to, when you transfer entry, when you are doing the transfer entry, it is reverse. It is reverse. Here it is debited, here it is credited. It is reverse. Partner salaries are credited, remunerations are credited, commission accounts are credited, and transferred to profit and loss. So if you remember, if you recollect, transfer entries are always reverse. So you have to be very careful. So often there are at least 4 or 5 questions based on this. So are asking you to calculate to pass journal entries for transfer of salaries, interest on capital, and also carefully you remember this, by heart this. So whatever, so understand and do, but ultimately you have to do this, pass these entries. Appropriations are more than available profit. What happens sometimes, the appropriations, for example, if total amount of appropriation, salary, commission, interest on capital is more than net profit plus interest on drawings, available profit is distributed among partners in the ratio of appropriations calculated. So what you have to do, you have to calculate interest on capital, interest on the, so salary, commission, so all those things you have to calculate. So all those things you have to calculate and then you have to divide in that ratio. So there are problems again based on this, you have to practice these problems. So list of important accounts you should know in this lesson. Profit and loss account of partnership firm. So you should know how profit and loss account, what are the contents of partnership, profit and loss account of partnership firm, profit and loss appropriation account of partnership firm, very important. So very important in first lesson. So partners loan account, how to prepare partners loan account, how to prepare partners capital account combined for more than one partner. So there may be 2 partners, 3 partners, 4 partners also in very rare cases. So you may have to calculate, you may have to prepare partners capital account for 4 partners also, 3 partners, 2 partners. You should know how to prepare that. Importance of illustrations. Try to understand and do the problems on your own. Facilitate self-learning. See, teachers and tutors don't do any magic. So they can teach you, they can help you, they can guide you. But whatever efforts you have to put, that has to come from within you. So all the effort should be self-motivated. You have to put more efforts from your side. So remember that no tutor is going to do any magic. No one is going to do any magic, for how much ever they are, whatever they help in, but you have all the efforts have to come from you. They can help you understand, they can help you, they can motivate you, they can suggest you, they can guide you, but you have everything has to, you have to do it, because you have to study and you have to write the exam. So please learn on your own. So that is why illustrations are given. Try to understand and do the problems on your own. Facilitates self-learning. So importance of exercise questions. Test your understanding by working with problems based on your understanding and check the answers. So you have exercise questions. Why they have given exercise questions? So that you, to test yourself, because what happens is when there is a question and when there is answer next to that, immediately your eyes will fall on that. So you know the answer instantly, you will see, and then you will try to do it. So ultimately, when you are asked to do that, you will not be able to do it. So that is a problem. So that's why exercise questions are given, so that if you have understood, you should be able to do that. So you should be able to do that. So first you have to learn from illustrations, then you have to do from exercise questions. Important questions for practice from T.S. Greva's latest books. Illustrations. So illustration 3, page 1.8, illustration 4, page 1.9, illustration 5, page 1.9, illustration 9, page 1.17, illustration 10 and 11, page 1.18 and 1.19, illustration 14, page 1.21, illustration 16, page 1.23, exercise questions, all questions up to exercise 35, page 1.97 to 1.104. So you keep it as a target and work out all the problems. So try to, these problems are very unique and very important. So if you are able to do this, so almost 70 to 80% of the lesson, of this portion, how much? I think I have completed around almost around 40 to 50% of the lesson. So you should be able to do, if you are able to do these illustrations, you are able to do the questions from up to this point. I will not be solving all textbook problems. So see, I will not be solving all textbook problems. Let me know in case you need explanation in any of the concept discussed above, or any specific problem in this in the comment. I will explain in my free time in my virtual classroom. Please have patience. So I also take regular online class for limited students. That is another thing. Next class we will discuss remaining concepts from accounting for partnership firms, fundamentals, method of maintaining capital accounts, concept of drawings, interest on capital, interest on drawings, past adjustments, guarantee of profit. So next class we will be discussing this. Note to students. So most of the schools finish the syllabus by the end of October. So be proactive and learn systematically from today. Remember, slow and steady wins the race. So don't be in a hurry. So what happens is, you keep idle, you remain lazy for a period of time, and you become alert near the exams, and nothing will enter your head. So everything will be going over and above your head. You will not understand anything because of the stress. So be careful. So you have to start learning now itself, from the day one. Today itself you start learning and prepare for your exams. Self-learning is the best learning. Students should try to understand concepts on their own and seek help from teachers for difficult concepts. So remember this always. There are millions of teachers and have different methods of teaching as well. So you may learn in school, you may have so many tutors, you may see some apps, you may see some other classes, you may attend some other classes. So many things are there. Everyone have their own individual traits and skills. Similarly, students understand in different ways. So different teachers explain in different ways. Similarly, students also understand in different ways. The ultimate goal of every teacher is to make the student succeed ultimately. My sincere regards and best wishes to my fraternity, my fellow teachers.